Hello guys, welcome back. Have you been trading the ICT style or smart money concepts or institutional trading, supply and demand, and you haven't found success, or it seems like there's something missing? Or let me specifically talk to those that have been trading um, ICT concepts. There is one thing that is not emphasized in the ICT style. ICT partially talks about it, he doesn't talk about it so much. And I've noticed in so many uh, YouTubers, those that trade the ICT style or ICT concepts rather, they also miss this thing. And that thing is market structure. We So many of these traders, they understand the liquidity grab, they understand imbalance and rebalancing, they understand the market maker sell models, buy models, they understand fair value gaps, they understand order blocks, but very few of them understand the market structure. And the combination of market structure and liquidity is mind blowing. It's something that could give you a very high win rate. We don't actually look for a high win rate. Anything that is 50% is amazing. If you have 40% with 1:3, that is okay. But market structure is something that is so underrated, especially in the SMC um, community. I hate the word SMC, believe me, and I'm so sorry for those that would be offended by me saying so, but I hate the word SMC because it has been violated. Smart money concept, it has been violated. So I don't want to talk about that anyways, but I've been looking through so many ICT traders. Actually, even those the who are in the private membership. I mean, I'm so sorry because this is going to offend many of you, but it doesn't matter. It doesn't matter. But very few of them understand the market structure. And when their setups are violated, when they are stopped out, 99% of the reasons they are stopped out is because of misunderstandings on market structure. Like Larry Williams says, market structure never changes. It doesn't change. It's always the same thing. And anyways, but you just have to understand that the combination of these two, market structure and liquidity, is mind blowing. And that is why in the previous video, not the last video I posted previously, but in one of the videos I shared the backbone of my strategy. The only two things of which without there wouldn't be any um, algo footprint concept or algo footprint trading models or trading style. The way I trade, I It will sound like arrogancy, but it doesn't matter to me because what I'm saying, I'm so certain of it. I trade nothing like ICT or many of his students. Before you judge me, I want you to listen to me very carefully. The reason I say so, it's because when I took ICT teachings, I didn't use them to, I didn't use ICT rather as to get a strategy. My main focus when I came to ICT was to not to grab a strategy. No, it was to understand the market. I wanted to understand the market because before I could see candlesticks like this, and I would be told we have resistance, price has to react and go down. We have support, price has to react and go up. But it wasn't being respected. Price wasn't obeying this stuff that I was being taught. And then when I found something new, I wasn't looking at making money. I wasn't looking at getting a strategy. I never had the chance to conversate with ICT personally in person. But even if I had his direct contacts, I would have never asked him a question like, what is your trading strategy? Can you teach me your strategy? When I came to him, I wanted to understand what moves the market, why it moves the way it moves, you know, who is behind all these candlesticks? Who's moving this market? That is all I wanted to understand. And the moment I understood it, I began to go on the charts to start the market to see things happening before my eyes. And I came up with my own trading style. All right. So, and that's why most people like, I'm so sorry, guys, but most of you guys are messaging me like, I understand how you took this trade. So there was an FVG on M15. So when price tapped on this FVG, then you entered. And when I say that, I didn't even see that there was that imbalance or that FVG gap, they get offended, right? Because what you are doing, you are copying a model that you saw someone using, either ICT or any of his students. But what I did was not to copy a model. What I did was to get the knowledge by which I used to create my own trading models. I don't know if you understand what I mean, right? So don't get disappointed when even though what you are looking at could be correct as well, it doesn't mean it's what I was looking at. You could be looking at FVG and I'm looking at something else, you know? So that's the difference between my style of trading is from others. Is it special or better than others? No way. I'm just trying to explain the way I trade. I'm no better than other traders. I will never claim to be better than others, but it doesn't mean that I should accept to be who somebody says thinks or says I am. You know. Anyways, guys, so This is US 30, right? And I posted yesterday, early yesterday, that okay, now we're gonna be bullish with the indices. Okay. By then, market was still printing this candle, this bullish candle, and it was actually in a big retracement. Now, let me move to H4. If you're going to feel bored that I'm talking too much, it is okay. But when I move to H4, I want you to pause the video and see if you could see exactly what I was looking at. The reason why I said that many people lose because they don't understand the market structure, or those who are actually being profitable, who are profitable in the market, but their win rate isn't that so pleasing. Maybe because 40% could be is good, but if you could raise it a little bit, it would be better, right? So look at this. We have this high. Let me change the colors to black. Oh no, I don't like black. White, yeah, better. This high that produced this low produced this high. This high produced this low. What are you expecting? We expect this low to make a high. However, it should not break above this swing high. The moment it violates it by having candles closing above it, that is not a liquidity grab. So every time you see liquidity grab, ask yourself a question. Is this a liquidity grab, or it's a shift in structure? All right. Every time you see something that looks like a liquidity grab, ask yourself. That's why you need to exercise patience. Do not act in a hurry. Do not try to be so quick in everything you are doing. Ask yourself, is this a liquidity grab, or is it a potential of a new swing high or a new swing low? Right? Because if, let me remove this. Oh, am I supposed to remove this? Okay, perfect. Because if this was a liquidity grab, all we needed was this. Switch to H1, right? It was this, because Liquidity grab, I beg your pardon. Liquidity grab, price has to come, tap in here. It doesn't have to close up. It may happen, which is okay. And then close in this range. But when we go back to H4, I want you to notice what happened in this situation. Price grabs the liquidity, yes. Back to H1. Now look at that. This is a big violation. All this stuff here. This is a big violation. If market is grabbing liquidity, all we need is one single push up beyond this horizontal line and then price to come back in this range. When you start seeing so many candles like this, closing up, closing down, closing up, down, up, down, this area has been violated. To me, I'm not saying you should consider this in your trading. I'm telling you the way I trade. According to me, this has been violated. All I need is a single candle to breach above, and then it so many breakout traders will try to follow the market up, and then suddenly price comes back in this range. If I could find an example for you guys, take for instance, before I go in far, can you see this? This is what I'm looking for. Can you see this? We went up, the first candle, it failed to breach. The second candle tapped up just a little bit, and then suddenly price leaves the area with so much momentum. That is what you're looking for. I don't want price to keep hovering over this area. I want price to touch, then leave immediately. In less than 2 to 3 hours, which I should see price with so much momentum leaving this area. But if you see this, first of all, that is why, guys, you need to know about timing. I keep mentioning about timing. If I check the time here, you check down here, this was 2 hours to midnight. By this time, you are not supposed to be trading indices, not even currencies. Why? Because there is no more volume in the market. You need to have specific hours when you come to the charts to look for setups. You cannot manage to spend a whole day in front of the computer watching charts day and night. You cannot afford it. You see this price delivery right here. This was during the New York session. New York session, equity opens right here. The equity open, right? Price went up, and on this candle, lunch hour, so much momentum. But then as we approach midnight, look what happened. What is this? What is happening here? Why the sudden change here? This behavior to this behavior? Because they are trapping traders, okay, and getting the market ready for the next trading day. I don't know if this is going to make sense to you guys, but I keep saying this, that each session will prepare for the next session. Asian session is going to prepare for London. London will prepare for New York session. So according to the behavior of the current session, you can have an idea of what will happen in the next session. And that's why among the indicator, I only have two indicators. I have the session. This Q zone, it only for what's this Asian session. I don't use those Q zones stuff. I don't. This is just for Asian session. If I use it, you can see the print, right? So at this time you are out, everything that is happening here is showing you what is going to happen next. When you see this, it is no longer a what? It is no longer a liquidity grab. It's now a shift in structure, and that's why when I saw this happening, now what time was it? This is the next day. When I saw what happened at midnight, I knew that price was gonna come lower because this is a liquidity void. This is a liquidity void. And if you measure it, what happened? Price came into 50% of this liquidity void, and then price left. So for those who are asking me, how did I know that price was going to reverse from here? It's because, first of all, this liquidity grab was violated. So instead of calling it price was grabbing liquidity, price was preparing for a shift in market structure. And that's why uh, in that process, price formed a smart money reversal. Okay. What is a smart money reversal? I have shared that on this channel so many times. We see a high, a low, a high. Um, Price makes equal lows, relatively equal lows, then a high. We break, we grab liquidity from here, and then the price comes and takes out this high. Then we know when price comes back in here, it will only fill in this imbalance to go up. This formation itself, it tells me, I am so sure of it when this happens, that price is going to go up. Why? Liquidity has been grabbed. There is no more guessing, we are going up. That's how confident I am with my trading styles. All right. So if I remove the replay button, you see what happened. You see? So in this session, you can see already multiple candles had closed closed above. So instead of saying that this was the liquidity grab, no, it was no longer liquidity grab. This was a preparation to a shift in market structure. Now, what about the sales? Because this is equity open on this candle. What I'm not going to go on the lower time frame to show you this. You can backtest this at your free time. What about the sell from here to here when the equity opens? That is also correct. Why? Because we have imbalance in here. That price has to rebalance. So if you sold from here, you know that you will not allow you not allow your what is that? I mean, you will not allow yourself to keep holding on to those trades thinking that price is coming to break this. It will not, because we had a break in structure, grabbing liquidity, and then when price breaks structures to the downside and to the upside, we have a smart money reversal. We have it here and here. So all this you see here was to grab this liquidity. Now, I'll show you more examples. Let me move to, okay, let me give another example. Hey, I'm not going to go so deep into this market structure because it's a very wide thing. I cannot explain it in one video, but I am not here to teach you everything. I am here to give you an idea. Make use of that idea. Go on charts. With a small idea, your mind is going to open up to new ideas, and you'll be able to see new things happening in the market. That's how you learn. Now, somebody was expecting sales. Uh, all right. Let me remove this. Nice. Okay. Do we have liquidity, buy side liquidity here? Yes, we do. But there is a problem. What does buy side liquidity mean? Buy side liquidity is only taken if the intention of the smart money is to take price lower. If they have no intention to bring price down here, why would they grab this liquidity? Now ask yourself that question. If they want to take price up, why would they use this high either to trap buyers? Because if I have like 200,000 in my bank account and they trick me to buy here with good risk management, I buy, and their intention is to take price up, even if there is a retracement to here with good risk management, and then they take price up again, do you think I would lose? So they are not so stupid to do that. Okay? So why do I say that this this was actually a buy side for a short term sell? I will explain to you in a second. Why do I say so? Because in the first place, we notice that price has changed. Order flow has changed. How? Because we have this low, a high, price made relatively equals. We have this high, then price made this low, and then suddenly we break it. We come to feel this imbalance in here, making a low, and now price is making a high. And before this high, let me zoom in, we had this low. We have this high and this low. Can you see market structure? So even if they are grabbing liquidity here, what do you think is happening? Do you think they are going to break this low? Because the moment they break this low, it means now they have violated what they have done here, and they pumped in so much money to drive price down, trapping all these sellers and then driving price up. Can you see that even if price came down here, no chance was given to these sellers to close, either to break it, what is this, um, either to close at in profit or even at a loss. Maybe somebody will say, okay, I want price to come lower so that I could take a small loss. No chance was given. Look, guys, I am telling you this. I don't care the bad comments you're going to put in the comment section. I don't care what you're going to say to me. If you do not believe that there is an algorithm that drives this market, I feel sorry for you. You could be profitable without this knowledge. There are so many people who are so profitable without this knowledge. But imagine what would happen to their uh, trading if they have this knowledge. So anyway, let me continue. Now it's messy. Let me remove them. Perfect. Okay, so now let me do the markings. Have we broken structure, taken liquidity? Yes. Remember what I explained earlier on. If if smart money wants to take price down, they should only grab liquidity and then go down and give respect to this high. No respect was shown at all. Nothing. And then we have another structure. It doesn't matter how small it is, as long as it is a structure, it remains a structure. So we have a high that is taken out, and 1, 2, these two candles is what? The order block. I know people talk about the last candle, but if you switch to H2, what happens? It's the same candle. It's one candle. And that's why ICT actually talks that all the down candles becomes the order block. Unless you see one candle. If there was only one candle here, let's say if we're using H2, then this would be the only order block. But since I'm using H1, why would I mark the last candle? All this below this high is an order block. Then what do we have here? Let me go to M30. Look at this. When you switch to M30, what do we have here? We have another order block. We have another order block. M15. Oh, we have an order block with what? Another breaking structure. Now, I have something I call, please do not use this against me to talk about me. You know, some time back, I posted my results of August on Twitter, and luckily, ICT saw the results and he clicked like. The moment he clicked on like, I don't know what happens. I don't know how the algorithm on Twitter works. I have no idea. Hundreds of people started commenting and liking the my post, and then a few of them were, I don't know, furious, angry, or I don't know what they felt. But there were a few people that left really bad comments because of my win rate. Okay, so do not use somebody's knowledge against them just because you find it to be higher than what you know, higher than your knowledge. It doesn't make any sense. What you do is to ask and learn. So, so we have a breaking structure. Now, where was I? I almost lost my. But I have something I call, what is that? And let me put in the capital, opposing structure, or or opposing order block. this is my own terminology. I'm not saying you should use it. I'm showing you what I know, what I use. I'm not saying you should do the same thing. I have what I call opposing structure or opposing order block. So what is it? This is where most of ICT traders and mentors, those who are trading ICT concepts and those who are teaching ICT concepts, get it wrong, because the teaching is that when there is a liquidity grab, go on the smaller time frame, look for a breaking market structure, and then FVG, and then entry. So you are only looking for the reasons to enter, but you don't look for the reasons why you shouldn't be entering that trade. What if there is a grab in liquidity, a break in structure, you know, but then still doesn't work out? One of the reasons is there is one of these, an opposing structure or an opposing order block, just like this. That means even though we have this grab of liquidity, guys, I'm tired. I just came from gym, so you pardon me. So even though we have this grab in liquidity, okay, we have this order block and the breaking structure that is opposing this market from going down. Let me repeat that. Do we have a grab in liquidity? Yes. But the problem is we have this order block and this structure on H1 which is opposing price from going down. And secondly, so that means to me this is violated. And the second thing is, on the higher time frame we have a smart money reversal, meaning the order flow is no longer bearish but bullish. So even if you get sales from here, it's for a short term up to here. This is an area where you are supposed to take your profit, just a scalp, and then you are out. So let me go to M5. What time is this? We have few minutes before the equity opens, and okay, 5 minutes. Okay, now we have a break in structure. We have that FVG in here. We're going to use our fib. Boom. All right, that was so quick in here. So we enter short, our stop loss above here. So now we know that our take profit has to be here, maybe in this range. Why? Because we measure this order block, which is on H1. You remember from here, a higher time frame breaking structure to I beg your pardon, let me switch to H1. Let me switch to H1. So from here, um, from here to this structure, um, to this structure, okay, and from this low to this high. I think this is becoming so messy. Let me remove this since we've already entered. Okay, I'll show you later on. So anyways, we know this is our entry. Now let's go down. Price goes up. Price touches the higher time frame order block H1. Can you see that? This is this rectangle is H1. Price goes up, down, it fails again. Second time it fails. Third time it fails again. So you had, what is that? 1:3. So 1:3, you should be out already as you grabbed a small scalp. Now, if we switch to M15, you see price has touched that higher time frame order block. Oh, guy, this is really good. Look, price just respected this order block on M15 and M30. At the same time, price has respected the higher time frame order block. Can you see how price respected both of them? So the entries I showed you that you saw earlier on my Instagram and on my Twitter, this is where I bought. And my target, my stop loss was below here. And my target, I think I had, what was 1:6. Let me check. Um, no, 1:4. I think it was somewhere here. Yeah, 1:4. Let's see what happened. Price went up, boom, boom, and we hit it. Now I want to switch back to H1 and see what happened. Okay, I'm gonna remove the first annotations. Now, listen. We have a breaking structure, yes. We have order blocks, yes. Price came into the order block, filling in this imbalance in here. If I use my fib from the low to the high, you see, price came and rejected 50% of this structure. Okay, so this order block with a breaking structure was an opposing structure from price obeying or respecting this grab of liquidity. So to me, when this happens, I no longer call this as a liquidity grab because it will not drive price lower. The order flow is what? Bullish because of we have a smart money reversal. This is smart money reversal. We broke a low and a high. A low and a high. Okay? So let me look for one example because time is gone. Let me look for one more example on the pairs. Euro USD. What is this? Okay, pardon. Okay, here I want to show you this. So we have a breaking structure. Why do I call it a breaking structure? Because we have a low, a high, a lower low. We expect price to respect this area. We should not see price going up beyond this. Okay, now price goes to this high and when you see this, you are still looking for a reversal. That's a violation already. First of all, you see, oh God, timing, guys. Look at the time. This is 2 hours, almost to midnight. So we are out of trading hours. Supplies is setting up for the next trading day. If I put back my this session breaks, which basically shows uh, days, you can see we were closing. This was on the 7th and this was on the 8th. So this momentum seized right here and price never came back. So would you still be seated at a computer waiting for price to go low and enter when we are out of trading hours? And the next day when the price came here, what happened? Price came to mitigate this order block. And why is it that this is an order block? Can you guess it? Because price came to this is a support that has to turn into resistance. Therefore, we have sellers selling here, and immediately they were stopped out by this huge candle. So I beg your pardon. So price came, touched the order block, and no chance was given. To those who were stacking. Maybe chance was given right here, right? If you, but who could maybe institutional traders, because they have a lot of money, they could survive actually this because they are equally um, induced like we retail traders. Okay, so they are also induced by the market makers. So, and this candle you see here was also inducing more sellers to go down. Okay, and then the price went up. So if I draw this, a low, a high, lower low, a high, price comes and it goes up. What is this? A smart money reversal. So why would you be looking for reversals from here when we are out of trading hours? Actually, price is moving, the market is moving, but we are not looking for setups at this time. Look, when I tell you that price, when we are grabbing liquidity, it has to tap and then leave. You see this? From this high, let me remove this. You see this high? Price taps a small closure in the candle here and then leaves right away. We don't see any more candles closing and opening in at this range. Price moves away right away. Let me give you another example. And if you must see, when this was taken out, there is no opposing structure. You could say, don't you think this was a breaking structure and this is an order block? No, because we have relatively equal laws. That's liquidity. Okay. And when price is creating a new swing low or swing high, it does not create it with how many pips? This was about 11 pips. It doesn't. That's not possible. You can see all these swing highs and swing lows. You see, from here to a new swing high, 100 pips. To a swing low, 150 pips. Here, 100 pips. So it can be a swing high with 11 pips. And we know that price is gonna come back in here to rebalance. You can see on H2 we have liquidity void. It has to be rebalanced, but this law has to be respected. Price should not break it if we have a complete smart man reversal. And price came into 50%, rejected, and went up. These are simple things, guys. I know um, market structure is not so simple to understand in just one video, but believe me, guys, you go on YouTube, look for traders who are trading ICT concepts or SMC. Show me one video that is going to show you this stuff that I'm showing you now. All right? Show me, because I know it's not there. All they're showing you is now price is going up. Start looking for supply zones, supply zones, supply zones. And you had marked this supply zone. I am not saying doesn't work. It works. But if you are waiting for this supply zone, how many days? Let me see, from here to here. No, is that correct? Let me use the daily. How many days? About, let me use this. Like almost, is that like 22 days? You are still, so 22 days, and you are still waiting for price to come in here. Yet price is moving. So, so this is all I had for you guys. You need to know when you are validating a setup, you need to also check if there is anything that is invalidating your setup. You don't just look at what validates your setup. It can be invalidated. And what you see here on GU, on pound USD, a smart money reversal. So I probably expect price to come back in here and go up. But because of the death of the queen, so there could be some crazy volatility on these pairs. Okay, but guys, I wanted to see this here. Can you see? I marked this high. I'm showing you more examples. I marked this high and I wanted price to grab liquidity, and then we go down. No chance was given. But if I go to M1, and these are the mistakes most of you are making. When I go to M1, you can already see some candles closing below. And now just because you had this candle closing below, you are already marking this FVG. And you're already selling. That's crazy. And then I have these people. I see so many people saying, no, my age is the win rate. I mean, it's the risk to reward ratio. It's not about the win rate. I could lose 5, 6, 7 times. It's okay. But if I get one correct, then it will give me 1 is to 20, 1 is to 30 in your dreams. So many of you, including me, we don't even have so much money. We don't have enough capital to trade. We are like, I started looking at prop firms. I was funded by 2 firms, my forex funds and the funding talent, which collapsed. You know, so if you have no capital and you're looking to get capital from prop firms, And they only allow you to lose up to 5% per day and 10% overall. So if you lose 6 times, 5 times, how many more percentage are you left with for you to be kicked out? If you lose 5 times, you have 5 more% to go. 6 times, you have 4%. And you are still waiting for one setup that will cover all these losses. And by the time it comes, it will give you four risk to reward ratio, five risk to reward ratio. So what I'm saying is, my point is, do not try to rush the process. Learn the stuff that you do not know. Increase your knowledge. Expand yourself. Do not try to make quick money. You could make it today and lose it tomorrow. I don't know what you're looking for. So do not do that. So I wanted to show you this example here on the DAX, which is my favorite tradable asset. We had a breaking structure. Let me remove this stuff. Can you see how price has respect this horizontal line? Can you see that? And now price has broken this high. This high is broken. Now, should I say that DAX is bullish? We are now bullish, but I cannot say we have a change in order flow. Why? Because it was this high that produced this low. This low has not taken out this high. So until price comes and takes this high, and then we continue up, I will not say that with DAX we are bullish. But when that happens, then I know we are bullish. And when I say that price is bullish, so just look for buys. That's a way of trying to, what is that? What is the word? I'm not trying to confuse you, because if we are bullish and tell you it's possible to find sales, it will confuse you. So you have to go step by step, learn step by step, because with my trading models, I could sell in a bullish market and I could buy in a bearish market. So that's it for today, guys. Just to summarize this, I talked a little bit about market structure, how it can be used you can incorporate it in your trading model. But don't just say I'm going to incorporate this. Back test it. Let's see it working in your model. Then you can add it. At the moment, just backtest watch the charts and backtest and see how it works out for you. I only touched a little bit about the market structure. Market structure, it's so diverse, it's so big, it's not something I can explain in 1 hour video. So that's it for today. Subscribe, leave a like, leave a comment, retweet the tweets, and yeah, stay safe, guys.